Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday, March 27th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at one of the bright spots in the commodity markets is that copper is headed for its first weekly gain since the start of the Iran war. Most of the industrial metals, obviously with silver falling this month here on expectations that this conflict will spur inflation and also slow that global growth. And really, the precious metals like gold, silver became this global growth story once we saw the optimism really take place here, declining interest rates, lower inflation. We saw central banks expanding, purchasing more gold, and then you saw investors also diversifying into the precious metals markets. Now, many of the central banks, with Turkey being one of the last ones, selling some of its gold holdings here, but somebody had to purchase that from it. From them, it was 22 tons worth of gold. And you're going to start to see that some of these central banks are more primarily focused on getting the inflation down. So they'll be either hoarding strategic resources, things like sugar, things like crude oil, and then also looking to import some of those energy resources in addition to most likely boosting some of its defense spending. So investors are really monitoring the extent of the recovery in Chinese copper demand, which is seeing a boost in orders from fabricators and that drop in the inventories. We haven't seen really much of a ripple effect though in the silver market. We'd have to check that, as its interconnection here with the gold market remains fairly firm, and the inverse correlation against the dollar is also very elevated as well. Now, the S&P 500 yesterday had its second worst day for 2026. One thing to note is that an imminent end to this month-long conflict could see the S&P 500 rally as much as 5%, taking on a couple straight days of gains. So if we could see any kind of resolution is where we see that snapback recovery. If you were looking at futures after the bell yesterday, we did see President Trump extend when they were going to escalate this conflict, pushing that out to 10 days. We saw a quick snapback in the S&P of about 50 to 80 points before reversing course here as many investors look to lighten up. Now, looking at the Fed officials, we did have 3 Fed officials spoke yesterday, and they really expressed that growing anxiety about the U.S. economic outlook due to this conflict in the Middle East. One policymaker stating that a spike in oil prices really shifted the balance of risk right now, leaving inflation as the bigger concern than the labor market. And when oil prices really surpass things like 115, 120, 150, start approaching these neck-breaking levels, it really does break that labor market quite hard. Now, one thing we'll want to watch here is Trump is set to address a Saudi sovereign wealth-backed investment conference in Miami. So if there's any kind of discussion around a resolution or an off-ramp, we could see some volatility in the markets to both sides. Looking at June gold, the high of the overnight session, 45.02, the low 4,400. The 20-day exponential moving average sits at about $183, with gold volatility sitting at 45.07. One of the key levels that I'll be watching on the gold market, 42.95, and then on the upside, I'll be looking at things like 45.95 to the upside as your key level of resistance, or 45.36 would be a closer one on that. So looking at just a couple levels here to monitor. Looking at the gold volatility, it does remain high at 45.07, and May silver, the highs of the overnight session, recapturing the 70 mark, getting up to 70.43, the low 67.44, and the 20-day exponential average to range sitting at $6. So well within that, about a half of what we've been seeing on a day-to-day basis here. Silver volatility is quite elevated though at 76.88, and the precious metal ETF flows continue to drop, with ETFs selling gold, silver, platinum, and palladium here, with the gold ETFs cutting about 13,000 troy ounces of gold, and total gold held by ETFs fell about 0.8% this year here, sitting at the lowest level since December 10th. So gold is advancing 1.3% this year, tacking on about another 0.7% in the overnight session here. So sitting up about 2%, but it did fall about 2.9% in yesterday's trading session. You'll get the silver ETF flows essentially unchanged here in the previous trading session. They cut about 229,000 troy ounces. In a year to date, it's down about 6.6%. You'll get central banks. We're going to have 3 speakers here out today: Fed's Barkin, Paulson, and Daly. For the economic calendar, we'll have University of Michigan sentiment. And then things to watch here: the 10-year Treasury yields punching through that 4.44%, hitting 4.45. So this is the highest level since July of 2025. Since then, we kind of steadily worked our way lower before having this green shoot back up to the upside. One thing I'll be watching here is a couple things on how the economy was really impacted at the start and the onset of the Russia-Ukraine war. We saw wheat futures, one of the best performers out there, but since it was so concentrated around production here in Russia with things like platinum, things like some of the precious metals hoarding, we're not getting that same reaction in that stagflation environment like we saw in 2022 when equity futures were pushing lower and we saw gold futures pushing higher. So we're going to want to look at different data sets going back beyond that over the weekend. So that high of on March 23rd of 4.44%, we breached that. The low on March 25th of 4.3%, we'll look at that as our first major support level on 10-year Treasury yields, and below that would be 4.24%. The Fed expectations here, we're sitting at a current target rate of 3.5 to 3 3/4. On April 29th, expectations are a 6.2% chance that they raise 25 basis points. It's really when you get out to July, it's a 27% chance that they raise rates. September 16th, 44% chance that they raise rates. You look at the dollar index sitting at 99.88. The euro currency 115.56, breaking back down to closing on that near support zone. Pull up a euro chart here. Look at the long-term chart. You'll see 115 has been that key level of support. Bitcoin futures at 66,500. So really breaking down to that key level here of support that we saw before that shoot back on up to about 72, 73,000. And then you go to the S&P 500, that gamma exposure, deeply negative here. So you might see some of the selling amplified at the downside, especially if we break below the 6,500 where it's at right now. So do yourself a favor, look at the daily chart on the S&P. Really 65 to about 7,000 has been this key level of support and resistance in this wider channel back and forth. You go over to Europe and Asia. Well, European stocks, they were lower as markets continued to weigh in those mixed messages about the war here. And Asian stocks, they remain on course for the 4th consecutive weekly loss, their longest losing streak since November 2024. And Japan's finance minister really flagged the possibility of taking bold action to counter the currency moves in reference to an intervention, as the yen traded near a threshold where authorities had entered the market on several occasions in 2024. So we'll want to keep an eye on the yen as well. So I'd really look at things like corn, wheat, crude oil, even the cotton market onto the upside here at the moment, as well as 10-year Treasury yields. And then the downside, looking at U.S. equities, looking at things like some of the foreign currencies, some of the industrial metals out there. It seems like that's the path that they're all trading in at the moment here. So if you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading, it does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.